Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Thursday, November the 16th, 2023. The market traded in a very narrow range today, and actually the trading was a little bit more difficult than it has been. A couple of reasons. Number one, the NASDAQ, along with the S&P, remain in a corrective pattern instead of impulsing, which did see a lot of follow through, as we've talked about, as we were all there and witnessed, primarily due to the push being made by a lot of the macro traders and the incredible market breadth and the advanced decline being very strong for the last 10 days, I'm going to say, or 7 trading days, pretty much from that October low that we had way back at the end of October, the 27th or the 26th. So we saw several rounds of very strong market breadth. First of all, down in here, and then up in here, and then at the report of the CPI. That was the strongest. That was like almost 11 to 1. I think maybe even higher, from 17 to 1, somewhere in there, which suggests that for every one issue that was declining, there were 11 or 17 issues that were rallying. So today, being that we are correcting, we kind of got a little bit of a little different picture in terms of the New York Stock Exchange. It was 1.7 to 1 declining. So, but that's okay, because the market was off, the market was down. So, it fit. In the NASDAQ, it was 2 to 1 declining. So for every stock, 2 stocks declining, 1 was going up. And it's quite easy to kind of go through and to see which ones were the most active. And again, we're finger pointing, or we're pointing out that it was Apple, it was AMD, it was Google, it was Intel very strong today, Metaverse, Microsoft, Netflix, NVIDIA. So the Magnificent Seven plus a few extras. So we saw today that Tesla started the day in the positive, got whacked, and ended up down over $9. So the balance wasn't necessarily there. When I'm looking at the NASDAQ, even as compared to what the Russell did, the Russell was down in terms of percentage-wise. It was down pretty strong today. The Russell future was down 25. And at one point, I think it was down even more. This was on an upswing. So there were periods where the Russell was like heading lower and the NASDAQ is heading higher. So even the crossover stocks that are evident in both of those indexes, they didn't help each other. And so it is very corrective. That's all I can say. Across the board, corrective. What actually continues to happen is it's holding support. It's holding here in the NASDAQ, it's holding support that I would associate with a fourth wave. So remember, 1, 2, we're inside the third, of which we did 1, 2, and then 3, a very nice subdivided third wave, completing at the release of the PPI yesterday. So we saw 1649, or let's call it 1650, 16,050, immediately rejected. No time wasted, immediately rejected. Started down on its corrective phase. So I'm going to break this down to the 15-minute, because if you're really short-term trader or an intraday trader, you're kind of looking at this pattern going like, well, what is going on? So I'm going to open it up so that we can see here. Here we have 1, 2, 3, 4, 5. There's the third. 1, 2, 3, 4, 5, or 5 down here, or 5 here. So is that A of this very small 4? And then we have A, B, C, but then what is all of this? So it almost is like, are we doing a small internal B wave? So this is A and this is all going to be B. And then this does appear to be a diagonal, actually. Of all things, here we have another diagonal coming into play. And if it is, we're going to get another swing lower. And so this would be, again, in that little fourth, not inside of this small fourth wave, but inside of that, it's inside the B wave. So, and it actually could be the C of the B, right? If this is going to be A, B, and then we get this going, and it just doesn't make sense until right in here, where you can see that triangle form. So what my expectation for tomorrow would be is like we still have to allow for, even though we did it today, we got down to 20, we actually got down below 15,800. And that was a good thing for the correction. But then the rallies have been really not good. Now, what could swing this all in the right direction is that we just absolutely pick up the steam, not do these small little moves. This is a 15-minute chart where we're just kind of waffling back and forth, that we open in Globex and they just give us a little gap, get it up there, get it going, because it needs to show that, number one, this little correction is over. And number two, they are going to finish the larger pattern, which happens to be on minute wave 3. Now, again, I'm looking for something to really pick up the steam here and get itself up to like 16,485. So first of all, on the way, again, I'm just going to state, on the way up there to that level, remember 16,250, 251, 252. Once you get above that, it negates the intermediate wave 2. It negates that previous count and pulls us back into this one, where it's a minor 4, and we're still within that minor fifth wave to finish the intermediate C and the primary B. And there's another alternate count that's going to come in behind all that. But I've not really worked out a lot of the details. And then once I do, I have to really be able to consider, is it something that I'm going to present? And it's a matter of, it's like, I know there are a lot of people that they're putting on trades, and they're trading over what not just I, but other Elliott wave analysts or other analysts are telling them about the market. So the minor fourth wave, which again, it would have to break above 16,002, we're going to call it 53, which is the marker right there, but 16,252 to be exact. There is where wave 2 would overlap wave 1. No can happen, and then we should continue in the form of a minor fourth wave. We are within this minor fifth wave, within it, we would be in minute wave 3. And within that, 1, 2, 3, 4, and we've got the 5. The 5 should be very dynamic. Now, here's what could go along with that. I mean, tomorrow we got expiration. We had Apple. Apple was very well supported, actually closed up $1.70, but had made it over $190 during the regular session. And then here we see in the after hour, extra hour, it is now bid above 190. Now, if that follows through and we start to see a pretty strong rally in Apple, it may carry the market. Again, being that we saw this, we saw this on Wednesday, this on Thursday, the upside momentum may have to pick up and have a strong relationship with the fact that tomorrow is an expiration. And it's an expiration before a holiday shortened week next week. We have Monday, Tuesday, Wednesday. We have Thursday is Thanksgiving. Friday, the market is open, but only a half day. So again, it's a lot of things could be wrapped up so that people are going to take the week off. People are going to go wherever they're going to go be with family or have family in, et cetera, et cetera. So I think a lot could be taken care of tomorrow. And I believe from what we have witnessed thus far since the end of October, some very strong upside momentum, that it would seem appropriate to kind of cap it off with that final push up. Now, I'm going to be very clear. If it gets up to 16,250 or 248 or 245, or even just below 16,001 something, it could be enough to complete this third wave, but and I'm going to stick to what the rules tell me, folks, on this one, that everything remains alive. Both the alternate, actually, they're alternates right now. It is very unclear as to what is in force. And so there's really two scenarios. Either the market continues to go up on the basis that we're moving into year end. The Fed is expected to now be done. And they're now laying out, not the Fed, all these analysts are laying out when the market is going to, or the Fed's going to start to cut the rate. June of 2024, May of 2024, July of 2024, all this information is being out. I mean, every bank after bank after bank, the bigger banks are coming out and saying, yep, it now looks pretty clear that the Fed should be done raising the rate. Okay. So how does that really affect the market? And how do people want to interpret that? There's going to be a million ways. But point being, a lot of this piling back into the market comes on that heels of the narrative that the Fed is done hiking the rate. Now, technically, let's talk about this market. Technically, we have all the moving averages on the 1 hour chart still nicely pointing higher. We got the 4 and the 8 right here, kind of just hanging out and not really doing too much. Actually, that's the 20. And let me just double check. I'm pretty sure that that's the 20. It is. But I wanted to change that color to make it a little bit darker. And it's not, because I just need it just a shade or a hair darker. Yeah, let's do it that way. Good. See, now it's a little bit darker. So I've dropped the 4 because on the hourly chart, it's there, but it doesn't need to be. So we have the 8, which is important, and it's following the market. So now is the 20, following market up, crested, came down, but now starting to turn higher again. If we can get the support there with the 50, which actually went up and is now going flat, let me show you. It's going flat right underneath the market. So that turns into support. Now, if we can hold that and not go flying back through it, then I'm going to be looking for it to hold, support, and turn and allow the market to move up to finish this third wave. And it's a minuet third wave. And so that's kind of what my ideal scenario for tomorrow would be. We go up. We're finishing out the week. We're finishing out an expiration. They're going to want Apple maybe above 190, 192.50, anywhere within there. I think they're going to want NVIDIA higher, and it's been getting smacked until later today. Then it decides to close up. So, Microsoft, it's well supported. Up 6 today. Does that mean we're going to go for 375? We're going to go for 380. These are all new all-time highs, by the way, for Microsoft as it gets itself way up here. So again, we will see. Resistance for this market right now remains pretty much right where it could not get past today. And that's 15,911, 912. I kind of got hung up there. Made several attempts today. In fact, it made on the hourly chart 1, 2, 3, basically almost 4 attempts to get itself back above 15,911. Once it does, then we got 15,997 or just 16,000. Then we have 16,049. That is yesterday's high. Need to get through that. And then we have 16,081, and then it should clear the path. Again, once I can put a marker down for wave 4, I will put in the additional fibs for wave 5. And that's going to be as wave 1 is compared to wave 5, and it would be inside this marker. Wave 1 as compared, and then bring it over to wave 5. So let's just say that this low today completed. I'm not saying a lot because it's, if the market comes down and breaks below that level, then please understand those fibs that I'm giving you right now are invalid. Okay, let's start over. Let's get rid of that. Come down. I wanted my extension utility. Okay, so let's start right there, and then over to this low. And we want to see, not bad, not bad. So if we can get it going, folks, have a nice rally tomorrow. First of all, it'll be impulse. Those are easier to trade because you get the follow through on the market. We should have the cooperation that all three of our major indexes are all going in the same direction with the same intensity. And so trading will present much better opportunities. Again, so what we have, first got to get above 912, I'm going to call it. Then we have 15,997 to 16,000. Then we have 16,051. 49 being that high, 51 just being 618 resistance above it. Then we have 16,081, which goes with the larger move that's kind of going up. And that is the minor wave 5. Then we have 100%, the equality, where 5 would equal 1. This is the minuets, right? There's 1, there's 2, there's 3. If that's 4, here's the connection. And that takes us to 16,201, 202. Now, if it can really just power up, then we might stand a really good chance of this thing completing tomorrow versus in a thinner market come Monday or next week. And that could put us up at 16,452, 16,485, which is where minute 3 would be equal to minute 1. And I really need to see that. I mean, I don't absolutely have to see it, but it would really be better for the structure. So that's kind of my thoughts for tomorrow. Now, to the downside, if I got to take this off and we start to break below that low at 15,796, we start to break below 95, let's say, we do have next support at 15,757, which would still keep it in that fourth wave category. If we really start to break down tomorrow, 15,688, 15,590, or even 15,465, then this is going to be left as a big 3. And that does not bode well for seeing this. So it changes the picture. So again, if it's going to do it, and it slides without finding the support. Now, I don't necessarily see that tomorrow because I think they'd have to hit a lot of stocks and they're going to be playing against a lot of larger players. Maybe it's going to be those larger players. I don't know. So anyway, if we turn, if we go lower, if we start to break, and let's just say if we really start to break 757, next support is 688 and then 590 and then 465. 590, then 465. A break below that drops us very quickly to 15,200. And now we're getting to be over a lot of points between the two. And it changes that bigger picture. And it likely, if it's going to happen, it's just really going to boom, 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 boom. Now, if it just kind of meanders, gets itself down here quick, finds the support, and then jumps and rallies off of it, great. Then we know it's the 4. Right now, we still can't tell that the 4 is done. And these levels are if it is. All right, let's go over and take a look at the S&P. Same deal, except we did come down a little bit. We got down to 4501. That stronger support was, again, just below all of that at 4490. So, and then here, I'm going to break this down so we can see it. Let me open this up a little bit. So here we have this coming down, and then it's left as 3 up. Now I'm hoping it's 1, 2, 3. We did a little bit. We can start getting a 4, and we can call it 1 of 5, right? That this all works out to be wave 4, minuet wave 4. And all of this, if we can get it up and turn it into a 5-wave structure, maybe get back towards that 45, 41, it could be wave 1, sub minuet wave 1 of minuet wave 5, right? So it's just going to, the 5 could break down into its own, and that would be good news for the upside, folks. It would be good news for the upside. First of all, it should propel us above that. We should get above that. We should start heading towards 45.83 to 4,600. Now, I'm not saying this is going to happen tomorrow because it would be quite the rally. This would be 30 points. This would be closing at 20. This would be 60 points. And up here would be 100. Could it do it? Yeah, it really could. Don't forget this week, right here on Wednesday, we saw the S&P up, I think, close to 90. So again, if we get up and get close to all this, you got a shot at that it could be finished. But that would mean we really have to have that strong market breadth. We'd have to have an advanced decline ratio really kind of propelling it, really standing behind and supporting buy. The structure itself could support it because it would be impulsive. Wave 5 is impulsive to the upside. The whole move actually is the third wave, right? Remember? Oops, wrong one. It's a third wave, 1, 2, 3, 4, 5, and the whole thing is impulsive. And so far, pretty nice. So we need it to get up there and finish it off. Once it's done, by the way, and we do have we can stick a minute wave 3 on it, then we're going to get a minute wave 4. So, and again, the magic number here to invalidate the intermediate wave 2 counter trend rally is 46.84, and that's basis the December contract. So it still has a way to go, and we'll see. Now, moving averages here, all looking pretty good. Here is where, look at that 50. This is the hourly 50 simple moving average. Just kind of came up and crested and went flat, even though at the end of the day, the market did pretty nice close, right? Last hour after, saw buyers move back in. But that 50 went flat. And there it sits at 45.18, which should provide support. And right underneath it, we have the 8 and the 20, both of them sitting all underneath. So we have 18, 17, and 15. 18, 17, 15. So pretty good support holding this market to start to propel itself higher. So again, my thoughts for tomorrow is that we should continue to move up. If we continue to break down, our next support remains at 44.90. And below that, 44.74, and below that, 44.58. I definitely really don't want to see it below 58. That starts to just make it a little bit touch and go because we have the wave 1 here. It just would not be pretty. All right, this is where I'm going to end it. For today, bond market did a nice turnaround, by the way, and so ended up clean, ended up nicely higher. That also should continue to move higher as it also continues in its counter trend rallies. So all things considered, things look pretty good, and hopefully the follow through will be there for us tomorrow. And the next update will be on Sunday, November the 19th.